Good morning, students. Today we discuss our topic is classification of accounts. So the classification of accounts. So in double entry bookkeeping system, the classified the accounts are three types. So double entry bookkeeping system introduced Luca Pacioli, the author of counts. So the double entry bookkeeping system, the classified the accounts are three types. The number one, personal account, and number two, real accounts, and number three, nominal accounts. The first one, the classification of accounts. So first one is a personal account. So what is meant by personal account? The personal accounts dealing with persons and business firms. So personal account relating to natural persons and artificial persons. So example, what is natural persons? So natural persons and artificial persons. So natural persons, we are all human beings. It is called for natural persons. So example, Ravi, Rajesh and Ramesh. So we are all human beings are natural persons. And artificial persons. Artificial persons is a business firms. SBI and Andhra Bank and Reliance and Tata. So these are artificial persons. So the personal accounts dealing with persons and other business firms. So the person is called for natural persons. So business firms it is called for artificial persons. So personal accounts principle. The receiver debit, and second one is the giver credit. So personal account principle, the receiver debit, the giver credit. What is receiving? So persons or business firms, they are receiving benefit. So they are receiving benefit. This account is to be debited. Persons or business firms, both the parties, they are receiving benefit from the business organization. So outside of employment. So they are receiving benefit. So who is the receivers? The person or business firm. So that his account is to be debited. And second one, the giver account is to be credit. So giver account is to be credit. Who is the giver? So the person or business firms. Persons or business firms, they are giving benefits. So who is the giver? The person or business firm. Both the parties are, his account is to be credited. So personal accounts, the principle, who is the receiver is debit. Who is the giver? His account is to be credit. Okay, this is personal account. So next one, real accounts. So real accounts relating to assets and properties of the business organization. So the assets are two types. Assets are two types. Tangible assets second one, intangible assets. So what is the example of tangible assets? Where can be touched if any asset, it is called for tangible assets. Cannot be touched to the assets, it is called for intangible assets. So tangible assets lo manaki examples machinery and furniture and land and buildings and etc. So these are tangible assets. So next one, intangible assets. What is intangible assets? So goodwill, patents, trademarks, copyrights. So these are intangible assets. So the real accounts relating to assets and properties of the business organization. So assets are two types. One is tangible assets, one is intangible assets. So tangible assets, machinery, furniture, land, building and cash also is called for tangible assets. So intangible assets are goodwill, patents, trademark, copyrights. So these are intangible assets. So what is the principle of real account? So real account principles. So number one, the real account principle vachesi what comes in debit, and second one, what goes out credit. So real account principle, the number one is what comes in debit, what goes out credit. So what comes in, so what means assets. So real account relating to assets. So what means assets? So assets comes in the business. So asset account is to be debit. So we are dealing with different types of assets. So as a business organization, the receiving assets, the assets comes in the business, so asset account is to be debit. And second principle, what goes out credit. What means asset? The asset goes out of the business. Asset goes out of the business, the asset account is to be credit. So if any business organization, they are receiving assets and as well as the giving assets. So what comes in, the asset comes in the business, the asset account is to be debited, and the what goes out, the asset goes out of the business, the asset account is to be credited in the books of accounts. So the one is the personal account and second one is the real account principles. The third one is nominal account principle. So what is nominal accounts? So nominal accounts relating to all type of expenses, losses, incomes and gains. So these accounts are called for nominal accounts. So example, what is the nominal accounts example? So all type of expenses and losses. So salary account and commission account, rent account and received interest account. So these types of accounts are, it is called for nominal accounts. So the nominal account principle. So nominal account principle, the number one, expenses and losses debit, and incomes and gains is credit. So the nominal account, the what transaction is debited, the what transaction is credited. So expenses and losses is to be debited to the books of accounts, and incomes and gains recorded in credit side of the books of accounts. So this is nominal account. So the classification of accounts, the journal entry bookkeeping system that classified the accounts are 3 types. So we are already discussed about these points. So, and once again, the first account is personal accounts, and second one is real accounts, and third one is nominal accounts. So simple thing, the personal accounts dealing with persons and business firms. So the personal account have 3 type of aspects. Just one is person, and second one is business firm, and third one is benefit. So person or business firm receiving benefit, his account is to be debit. And second one, the person or business firm giving benefit. So that person or business firm we have recorded in credit side. So this is personal account and personal account principle. And second one, real accounts. So real accounts relating to assets and properties of a business organization. So assets are 2 types: intangible assets, tangible assets, and intangible assets. So the real account principle, what is real account principle? What comes in debit and what goes out credit. So what means the asset comes in the business, so asset account is to be debit. So what goes out? The asset goes out of the business, the asset account is to be credit. So this simple principle. The final is nominal accounts. So nominal accounts are relating to all type of expenses, losses, and incomes and gains. So the nominal account principle: expenses, losses, debit; incomes and gains, credit. So this is classification of accounts and principles. So next class